A wonderful good morning, ladies and gentlemen, and welcome to Markets for Breakfast. My name is Alex Tuvidari, and I welcome you once again here to Naga. And we are going to look through the markets this morning. It is November the 5th, 2019. And yeah, if there's something we can really say here, is that we've seen a lot of positivity in the market, very optimistic markets that have shown, especially risk markets, that they only know one direction. Now, what is the story behind it? We can see, for example, here's the Dow Jones. Let's have a look at it. So you can see it's a really big increase yesterday, and also on a daily basis, you can see that now even the Dow Jones has reached a new all-time high. The same thing goes for all U.S. indices at the moment. This is the Nasdaq. We can also have a look at the daily chart here, so you can see that same thing really. So everything is perfect, right? That's how things are looking, and we want to discuss whether it is like that. Now, first of all, a lot of that, or all of that, has been very much fueled by the optimism of the U.S.-Chinese deal. And there is talks about that China suggested that they are willing to come to the U.S. even to sign it. So President Xi said China would be, or he would be willing to come to the U.S. and sign that agreement. I think that what was the reason for that is that there is an article in the Financial Times where it says the U.S. considers dropping some tariffs on China. And Trump administration officials are debating whether to remove some tariffs on Chinese goods as a concession to seal a partial deal that would pause the trade war as early as this month already. And that is really what is fueling the stock markets up here, and that is really helping to keep the whole, let's just say, risk on sentiment really in place. And that's what we've been seeing. And that's something that is likely to continue throughout the day. So what it means is that risk markets are likely to continue to see their way up. Let's have a look at the dollar index here for a moment. I like to use the dollar index in order so that we can see how is the dollar doing in totality against other currencies, not just euro dollar or pound dollar, but you can see that the dollar yesterday gained a little bit back. So that means that we can definitely expect more of the action in the stock market. And even if we look at gold, let's pick up gold here for a moment, what we can see is that gold had to take also some, or took some toll on gold yesterday, but we remain very well within that 1500. Nonetheless, rather floating now to the lower end of the things. Now, the biggest outperformer of the day was the Australian dollar so far, and that is the 30-minute time frame. And you can see that yesterday it got really not so positive, but today it's recovering some. Now, the reason is that we had the retail sales out of Australia that came in weaker at 0.2% versus the 0.4%. Now, but we had also the RBA, so which is the central bank in Australia, and what they were saying is that they have not changed the interest rate, so they kept it at 0.75%. And that has actually brought the Australian dollar up here. But they also said that the easing of monetary policy since June is supporting employment and income growth in Australia and a return of inflation to the medium-term target range. Now, what it means is that they are not likely to cut rates any further from here, at least not without necessary, really something necessary to happen. So that is good. That could bring the Australian dollar back really into a longer term thing, because if you look at it from a daily perspective, the Aussie has been really falling. This is April 18. So that has been quite a big drop in the Australian dollar. And what it needs now, first of all, to turn a little bit some tide, would be a break that above that 69.30 level at the moment, and to really reignite that move that we've seen here earlier in July. But that would imply that we need to see a weaker US dollar, and that, like a more weaker US dollar, and that is still on the brink of happening. Now, the thing is that is helpful is that because, or that which if the U.S. give the concessions of giving in to China what China is pressing for, really, which is removing the 15% tariffs that were imposed in September. That would really, really, really put things in a much better situation and help a lot to bring markets back or even further optimistic. Now, about that optimistic thing, like the stock market, especially like in S&P 500, the Dow Jones, Nasdaq. So if you look at these things, I just want to go through a number of things of why we should pay a little bit of attention. Now, we secured new highs, yes, but now the year-on-year decline in earnings continue to, yeah, to float deeper. What it means is that the earnings growth that companies are effectively making less and less and less and less money. The earnings of those companies are weak. Now their stock price might be going up, but these companies themselves, they are not doing well, and they continue to not really have, let's just say, an outlook of growth in their earnings again. And these things are not so positive when you look at on the healthy side of it. And that Sven Henry calls it a gap. Basically, the market's going up and jumping up, and at some point it will notice, oh boy, I jumped so much, and now I can't sustain that height because everything that I needed to, if you have this kind of worth to a company, it needs to earn a certain amount of money in comparison. If it doesn't, then some people at some point will say, well, I'm out of here. And that is then when you really find out that markets could turn lower again. And Sven Henrik puts it, by the time this trade war is over, there will be more open gaps on the S&P than soybeans sold in China. Because also, where did I have it here? There was some concerns about that China might actually not be buying all these vast amounts of soybeans that they are expected to. And that is something we should be prepared for. That's something that we should pay attention to. Simply because it would put the whole, trade situation back in a very, very different perspective, and that's why I'd be quite expectant of that. There might be some hiccups that could really come back here. And until then, yes, the prices are rising. They are not rising in a healthy way. The companies cannot sustain any sort of, there is no growth against it. It's not, this is nothing, none of that really is based on anything real or legit. And that's why it's greedy. It's greed. That's why we see anyone who sells anything before 100 is a chicken, is he writing? That's funny. No, but what it means is that we have a big amount of greed in the market. What it helps for is that we have definitely a clear risk on scenario. So selling yen is absolutely also the name of the game. You can see that the dollar has gained against the yen noticeably, and on a daily basis we could be in for a break of that resistance around the 109 that we haven't seen really since we came down in May earlier this year. Now look, the yen is an animal. I mean, this thing can really go from 104, 114 or more down to 104 in a heartbeat. So we could really see that really big increase here to the upside if we see that resistance area that we're not able to break through in June, in July, in August, in October, and November. That could be quite an interesting trade if that risk on persists, and it looks like it might persist. So it looks like this deal between US and China, this phase one deal, might be happening. Now, what I was trying to show you is, I don't find it right now, unfortunately, anymore, is that there is a lot of doubt about a phase two deal actually happening, and it's the Chinese that talked about it even yesterday publicly. But anyway, we'll get to that in a later stage, because I'm sure it's going to come up again, and this is when the Chinese will then say, like, okay, we made some concessions here and we're buying, but really not like they're saying there won't be agreement on intellectual property. There won't be other important things that the U.S. is very much challenging and demanding about. So that's why I'm thinking that we could see stock markets take somewhat of a dip sooner than later. But for now, obviously, the optimism is going up. And we can see it, like I said, also in gold. We can even see it in the price of oil. Let's put up the crude oil price here. That has also gained back until that 57. But remember, yesterday we talked about the 57 level and how important it is. And yeah, we got a little bit of an overshoot, but then anyone who sold into that level was able to make like a decent return here on that resistance level. Now we'll see if the price really breaks and we can solidify a close on a daily basis, like we did here, for example. Then it will be quite interesting to see where the price can go further from here. But for now, the 57 showed as a very nice level that resistance kicked in. So looking at the calendar further today, what we can see, first of all, the PMIs out of Europe yesterday, they came in relatively okay. So Germany had a 42. It's still a bad number, by the way. Anything below 50 is bad, but it's not as bad as we were afraid of. And let's have a look one more time at the euro dollar also here, because it's not really showing any sorts of signs that it could claim back that 112 level. On the contrary, now we're actually challenged to retest that 110.70 at 111 area from where we are, which again also was a support in August and in mid-August, and that could be a level that is really more on the books now than the upside. Even though the PMIs were a little better, but they're still bad, and we still have, the situation that things in Europe are not doing all too well. Lagarde also spoke yesterday, the incoming ECB president, and she had her inaugural speech. She didn't mention anything to monetary policy, given that it's almost out of anything it can do, the central banks, they probably don't want to say it too much in order not to spook people too much. And so we see what she's going to say on the next ECB meeting, but right now we didn't get anything from Lagarde, and that's not necessarily helping the euro. The euro is facing a very, very dovish central bank, and that is likely to keep the euro down. Now, also yesterday out of the US, we saw factory orders dip further, 0.6%. So another piece to the puzzle that tells us, hey, the US is not doing as good as it would like people to believe, And looking at the calendar today, we have also the Caixin out of China came in weaker than 52.8 instead of 51.1, and that again also shows us that, hey, well, look, even though we had the manufacturing PMI come in stronger recently, the last one surprisingly stronger, so there's always a debate on whether those figures out of China can be trusted, but there's also a debate whether they can be from the US. So but in any case, they are still not showing positive trend yet here. There was a one-off positivity in the manufacturing, and that will have to be confirmed the next time around. So long story short, trade balance could be interesting, given that that's something Donald Trump has always looked at, but also the market PMI services, the ISM non-manufacturing, those are important things. Why? Because the US economy is built for the very most part on services sector and consumption. So non-manufacturing is a very, very important figure. If that number comes in weaker, like a lot weaker than expected, then that could put a dent into the stock market's rally as it is happening right now. And obviously the crude oil stocks, if we get a build here, then that could push the oil price lower as well. If we actually get a draw here, meaning there's less oil in the stocks than expected, then we could see oil challenge that 57 resistance and actually try to push above it to some extent. So that's so far for the traditional markets. Looking at crypto, what we can see is that Bitcoin has attempted to push out the range to the upside, but you can see that big resistance here, 9.6, 9.5. It was sold off massively again, and here we are, deja vu, back into the 9,300 trading range, and the attempt to the upside can be very clearly labeled as failed. And let's see how far it's going to drop from here. If we can get a daily green candle still, maybe somewhere around 9.5, 9.6, that would be very, very well, and that could solidify bullish ambitions. But for now, it rather seems like another failed attempt that keeps this sideways market pretty much intact. So that's my overview of the market this morning. As always, thank you very much for listening in. I wish you a great, successful trading day, and we'll be back here tomorrow morning. Bye bye.